Hello everybody, just doing a really quick video here because the market is gone insane today. In fact, I think that we may even start to see a market crash potential actually come to fruition, and we may actually see this market crash out a little bit over the next few months based on the Fed minutes that we're seeing today. Basically, to sum up the Fed minute, the FOMC minutes and the meeting that they had, and some of the big pieces of news that actually came out of that is the Fed sees inflation going higher. They see supply chain issues still being a problem throughout 2022. And they basically have admitted that last year and everything that they've done to try and battle inflation up to this point, it was not the right move. And they made the wrong choices to battle this inflation that we've been having in the economy. And on top of that, then, obviously what we've seen is we've seen the 10-year start to raise, and we started to see interest rates already start to go up because of this FOMC meeting today. And correspondingly, when the 10-year goes up, we start to see tech stocks sell down. And so that's what we've been seeing, especially in the tech sector. But really, it's a lot more than just tech stocks that are selling down today off of this meeting, because basically what they're showing is that we have potential for a slowing economy and potential for continually rising inflation. And so what that would lead to essentially is stagflation, in my opinion. I think that what would happen is eventually we're going to enter into this period to where we have a declining economy with rising prices still. And that could literally just set the stock market up for a recession, quite frankly. I know that people don't want to hear that, but it could set the stock market up for a recession. So I just kind of wanted to hurry and make a quick little synopsis video on this for you guys as my viewers, so you kind of have at least a general outline of what's happening. I really would suggest you just go read the whole 8-page document, I think it was, that the Fed put out for you to be able to read it. It's FOMC minutes, sorry. So yeah, I would suggest going and reading that whole thing, because there's a lot of good information inside of there, and they give a lot of well, the good information isn't so good. It's a lot of bad news essentially inside of that document. And they even talk about, their timelines on the tapering, and they're expecting to increase the taper speed, and they're going to be increasing the rate of the balance sheet runoff. And man, basically they're gonna have to taper really, really hard and really, really fast. And I wouldn't even call it a taper anymore. They're just gonna have to raise rates hard and fast, and the market is not gonna like it. They're not going to like it one bit. And today, I think, is just a great example of how the market is going to react as we start to see these rate hikes happen faster than we had anticipated. So I just wanted to hurry and make a little video about that. And on top of that, I wanted to kind of talk about what we can do as far as our investments going forward. So here's a couple of thoughts that go through my head. First thing that I'm noticing is that anything that has a high PE that isn't profitable is getting burned to the ground today. And it did the same yesterday. Now, if you can find a company that has a low PE and is profitable, and when I say low PE, I'm generally speaking under 30, and even better is under 20. Those companies, excuse me, those companies, when you find them, they're actually green still, even though the rest of the market is all poopy doopy. Those companies with a low PE ratio and that are profitable, specifically the profitable companies, they are doing well. And I shouldn't say they're doing well, but they're not red. They're at least green. Yeah, maybe it's slight, but still they're at least in the green instead of going down with the rest of the market. So if you wanted to hedge in stocks, I mean, I would say that maybe putting money into something like that is an option. Myself, as far as my stocks go, I am not going to be hedging or selling any of my positions. What I'm going to be doing is I'm going to be trying to make as much extra money as I possibly can over this next little while. And that way, if we do continue to see this sell-off happen, I have cash to go and buy more of my favorite companies, which happen to be tech and growth stocks, which, those are the ones that are getting hammered today. And for me, I see this as a really good buying opportunity for my portfolio. But, if I did want to hedge, if someone did want to hedge, I would suggest, maybe a low PE stock that's profitable. Something kind of like, I don't know, anything that's kind of in the Dow Jones. In fact, that's why the Dow Jones has the support that it's shown the last few days compared to the S&P and the NASDAQ. Anyway, Not financial advice by any means, but that is something to consider. And then the actual best hedge, in my opinion, if the Fed is thinking, hey, inflation's going to continue on for some more time and we're going to keep on having inflation through possibly 2023, like they're saying in this meeting, then personally, real estate. I think real estate's going to be where it's at. I mean, inflation helps drive up real estate prices. And so if you want to hedge to this inflationary problem that we're having right now, real estate's a great place to go. I know a lot of people are really scared about real estate values, and everyone's really scared that real estate's in a bubble and the housing market's in a bubble. But I personally don't think that we're quite there yet. I don't think that we're going to see real estate values come down in the next 2, 3, 4 years. In fact, I have a video that I'm kind of planning out right now where I discuss where I see real estate prices going over the next little while. And I have a really cool way of kind of showing you why I think that real estate prices are going to go where I think they're going to go. So stay tuned for that. If you're not subscribed, subscribe so that way you can see that video come out if you're interested in seeing my projection on what real estate market's going to do. But yeah, I think that today is just the nail in the coffin that the Fed didn't react correctly to this inflation. And the market is coming to that realization that they're going to see a lot of rate hikes over this next few years. And they're probably going to happen a lot faster than what we expected. And so there's a good chance that we could see the market have a taper tantrum. So for me, I am going to be raising cash and buying stocks when I feel like we're getting closer to a bottom. If this pain continues, who knows? Tomorrow we might just go back to being green. But if it continues, I'm going to just keep my eye on it, and I'll probably, pick up a couple shares here and there every day as this thing goes down. And even if those shares burn me on the way down, it's better to kind of dollar cost average in my own opinion. And then on top of that, I'm going to just put every last penny that I can into real estate. So I probably will wind up trying to find some more projects as far as real estate go for 2022, as I think that this inflation that we're going to possibly see be a little bit more persistent is going to just be a wind to the sail of this real estate boom that we've been seeing over the last couple of years anyway. All right, guys. Well, I hope that you enjoyed this quick video. I know that it's not edited. I know it's not fancy or anything like that. There's no animations to it, but I hope that you enjoyed the little bit of content that I was able to provide to you. And I just really wanted to get this out quick to everybody because I think this is really important shift in the markets that are happening right now. And I just kind of want everybody to get my 2 cents on it. And I'd love to hear your 2 cents on what you think is about to happen too after this Fed meeting release that we got today. So go down in the comment section and leave a comment down below on what you think is about to happen in the markets. And I guess we'll just have to wait and see. And everybody can place their bets where they place their bets. And I just wanted to give you an idea of where I'm putting my bets at. All right, guys. Well, have a great rest of your day, and we'll catch you in the next one.